Good morning, everybody. Everybody's looking very not tired. No, tired actually. You're looking very tired, but never mind. I will talk to you about politics and banking. I'll first talk a bit about the literature, what is going on. Then I'll talk a bit about what's happening in a few countries, and then I'll talk about Russia, what's happening in Russia in terms of politics and banking. And of course, when we talk about politics and banking, it's going to be about how politics use banks, how politicians use banks, and how banks use politicians. And they use each other. Okay. Now let's think of this as the general framework, generally, how we think about the political markets. And on this and the slide you see a few interesting things. You see people that demand public policies, you have some policy, and you have suppliers of public policies. And this is what is based on Buchanan and Tulloch's work and others, Barron among others. And this is a general framework to think about political markets. Because markets are also supply and demand. Political markets are also supply and demand. So basically, who are the people who demand policies? It could be some firm, it could be some NGO, or an activist, maybe some green activist, or maybe some social activist, or maybe a blogger, like Navalny, who wants to fight corruption. Other firms, so you have interest groups in society, that could be persons, could be firms, could be organizations that want some policy for some reason. It could be a policy that is good for the public good they believe in. It could be policy that's good for their own private interests because I want protection from competition, but they want some policy. And so the medium of exchange is going to be how can I, as a demander of policy, actually make the policy happen? I could try to promise votes. I could give information. For example, maybe I am the organization of businesses, a business association, and I spread information, and through this information I try to change the legislation. Or it could be financial support. Think about campaign financing in the United States, where now in the presidential elections, the big fight between Clinton and Trump is, among other things, about money. Who's raising most of the money? It's campaign financing, financial support for some party, and then you hope to get something you want. Maybe you want someone elected, Clinton or Trump. You want some regulators that you can manipulate because you give them some money, or you give them some special information reports that show that if you would do this regulation, it would be so good for the economy. Or you want to manipulate courts. So you want something from some official authority. And this is the general idea of political market. There's a huge literature on these things. But what I will do is focus on a small subset of these political markets. I'm going to care about financial institutions only. I'm going to care about elected officials. And I'm going to care about direct political connections. This is the thing, right? That's what we'll talk about. Okay? So it's a subset of a larger literature. Good. So now this whole idea of is there any possible link? Of course, there is more than banks. So let me start by looking at other firms, non-banks. In fact, these are two very famous papers, both in the AR. Most of them have heard about these. They have the Fissman paper, and this Fissman paper is really cool. They look at the Suharto regime in Indonesia, and they find at the moment there are rumors about Suharto dying. You see that the stock prices of these firms that are known to be connected to the Suharto regime, they start falling. So it's a kind of stock price measurement of the value of political connections, you could say. So apparently these firms got something from Suharto because otherwise they would not see their price fall if Suharto is dying. There's another paper of Facchio, and they look at basically a large cross-country sample of firms, and they see that if a shareholder or a director enters politics, there's a positive value. Not from other parties, by the way, yes?
So about Suharto's death, there was Michael Jackson's death.
Yes.
And stock markets went down as well.
Yes, yes, but not. It's a diff and diff. So they do look at stock markets. They look at the stock price of the firms that are connected. So basically, the moment Michael Jackson died, maybe stock market generally were down, but some more than others. For example, the company that's selling his music maybe was hurt more. So the question would be: the companies that are connected to Michael Jackson, do they see their stock prices fall more? If there is any such company, of course, than other companies. So it's a diff and diff thing they do, kind of. Okay, so So how would you measure the value of some political connection? This is the thing, right? How could you measure it? Well, one measure we have already seen in the previous slide, it's just look at the stock price. But that's of course a bit rough. So there's other things. There's a very big literature on soft budget constraints. Actually, this has been a big thing in the former Soviet Union. It's still the case in Russia. If you think about the monogorods, it's about soft budget constraints. It's about guys getting subsidies, and they give something in return. What do they give in return? A safe stream of votes for United Russia. That's what they give in return for the soft budgets, for the loans. There's a famous paper of the QG of Kwaya and Mian, and they look at Pakistan, and they looked at those firms that have political connections in a demonstrable way. They have easier access to credit. So that's a soft budget constraint too. Actually, this is very related to this. There are a few Chinese guys, and I don't mention all of them, there are more of them, and they basically also show that having a direct political connection to the Communist Party, a personal direct connection, gives you easier access to finance. And that's part of the growth story in China, actually. And that's why many of the new entrepreneurs in China become a member of the Communist Party, because it's a ticket to the banking sector, essentially. You have access to government contracts. This is a very big literature also. These Italian guys are really nice. They show in Italy that there's a very direct link in Italian communities, actually. There's a direct link between political connection and access to government contracts, so public contracts. You could think about regulatory oversight. So if you have direct connections, there's less regulations. You could think about bailout options. So basically, if you have connections, you're more likely to be saved. But this is generally for firms. We will show these things for banks, essentially. Yes?
Is the literature treating only in one-sided direction of preference? So if I'm a banker, I like to befriend a politician to get connections, or it's also that the politician likes to get the connection to oil the business. You can do many things as a politician.
It's in two directions, most definitely. And in banking, interestingly, most people have looked at the one direction, but I'm going to look at the different direction. And there's a few papers doing this, and that's what I like. It's what I like. The interesting part is, so we all say firms, banks use politicians, but I'm going to ask, hey, do politicians also use the firms and the banks? And the answer is, hell yeah. So yes, the answer is yes. So okay, why would you think about banks? So why would I take the subset of financial institutions in this political market? Well, banks have damn good reasons for political strategies. Why? They are rife with government-imposed constraints. There's probably not a more constrained sector in the economy than the banking sector. They have capital rules, liquidity rules, leverage rules. Actually, they have a zillion amazing set of rules you could even count, and it's a whole profession all by yourself to comply to all the rules banks have to comply to, especially after the financial crisis. You could even say that banking system is more heavily regulated than the nuclear energy sector. And the underlying reason for this, of course, is, first of all, information is very asymmetric in banking, but most importantly, they are systemically important. So why do we care about nuclear energy? Why do we care about regulating the car industry? And because they're systemically important. So if big banks start to fail, everything could fail. Our payment system could fail. The concept of money could disappear if the banking system disappears. We don't want the banks to fall. So that's why we regulate them so heavily. So that means there are incentives for political strategies at the level of the banking sector. Do we see this? We see this everywhere. So this is usually referred to capture. So the banking sector tries to capture the policies. And you see this today, big time. You had the financial crisis, you get new rules, the Basel III rules, and all kinds of different rules. And the banks really do their utmost best to capture these new rules and to soften it. And the new rule is not even there, and it's already full of holes again they can use to kind of escape. Now, what the theory says that you will get this capture, especially in a few subsets of industries. Which subsets? Industries that are concentrated and that are oligopolistic. And of course, this applies very much to the banking sector. Banking sectors are typically very oligopolistic, especially in Russia, where there's a few big banks dominating the show. And of course, it's a very heavily regulated industry. So they have very good reasons to try to capture the policies because they will suffer from these policies. What could be the example? For example, in lobbying, you know the famous example that the banks very heavy lobby the politicians in the United States. There's a massive campaign financing to politicians of both sides in the United States, just to gamble on all the horses. I mean, if there's three, they would finance all three. And you have the famous problem now, actually, that Clinton has. Clinton has this problem that actually she has been giving speeches for a few banks, one big bank, at a very high price. How much was it? $250,000 or something for one speech, something completely outrageous. And this is actually now, she's blamed for that. You are too much connected to Wall Street. You will never defend ordinary people like Trump will. You're glued to the banks. You have the whole Glass-Steagall Act. That was the big start of the liberalization in banking. And that was actually repealed in 1998. When was it repealed? It was repealed when Clinton was weak. He was being impeached because of the Clinton, the Lewinsky affair. And he was under impeachment. He was almost losing his presidency. And at that moment, there was a big merger between Citibank and Travelers. And this merger violated all the rules because Travelers was an investment bank, an insurance company, and a brokerage. And Citibank was a bank. And it was, according to the Glass-Steagall Act, not allowed to merge all these things together. So then what do? You do the merger. Usually the logic would be, okay, you buy all the stuff and then you have to sell parts again. But the other solution is, we're not going to follow the rules, we're going to change the rules. And that's what happened. So there was a massive amount of lobbying money on Wall Street in that year, and then eventually they did the Financial Modernization Act, which was the beginning of the big take the money show of the banking sector, essentially, right? And you also see the 2008 bailouts, where there was a massive amount of subsidies to the banking sector. So basically, the question is this going on? Are the bankers and politicians, are they exchanging favors? It's not a very new insight, actually. And just to give you one paper out of many papers, there's a paper looking at deposit insurance. Of course, deposit insurance is a massive protection scheme for the banking sector. They don't really pay the cost for it by far. And they get a massive buffer provided by the government. What you see is that these deposit insurance schemes are mainly adopted in countries that are poorly capitalized banks, and it's usually a result of very extensive lobbying. So banks get these protection, especially if they are weak, if they could use the protection, and if there's a lot of lobbying. Think about increased deposit insurance in the US and Europe after the crisis, but also in Russia. Russia introduced deposit insurance in 2004 when there was a banking crisis. They increased it heavily in 2008 when there was a banking crisis. So this is very much in line with some exchange of favors. And of course, it's actually bad. We know that deposit insurance works to stabilize a crisis. But we also know that introducing deposit insurance will lead to moral hazards. If I give you, all of you insurance, you're not going to care about the quality of your bank. Who gives a shit? Because, hey, I'm insured. So I will bring my money to the most risky bank that pays me the high interest rate. I'm not going to care about the risk they take because I'm insured. Which creates risk-taking banks. Because if I, as a bank, I have to pay very high interest rates to attract you, I will need to take a lot of risk to be able to afford these high deposit rates. So the introduction of deposit insurance creates more risk-taking banks. This is well known. There's a famous paper in the Journal of Monetary Economics already in 2002, before the crisis, that shows there's a very clear link between the introduction of deposit insurance and later banking crisis. So the optimal policy is the policy of Australia. What Australia did is in 2008, they introduced deposit insurance. I come to your question. And then 3 years later, they skipped it again. They introduced deposit insurance as a way to fight the crisis. And then they say, but in the long run, it's going to be costly, so we skip it again. And if time comes, we will probably introduce it again. It's time inconsistent, but it's better than this. Yes?
Yeah, my question is, insurance can be good because of diversification concerns. If some bank fails, then maybe we could help this bank. Is there any evidence that the effect of moral hazard outweighs the effect of insurance benefits?
Yes, yes. That's exactly what this paper shows, in fact. So you have both effects. Also, your question seems to suggest that the insurance is actually paid by the banks. But it's never paid by the banks, it's paid by the governments. So officially, some countries have a real insurance fund, not all countries, some countries don't. But if one big bank fails, usually the whole fund is empty already. Typically, if there's a real banking crisis, like in the United States, the savings and loans crisis in '84, the insurance fund was completed in a matter of 2 years, and then the government just has to keep financing it. So it's an insurance which is not paid by the guys that are insured. In that sense, it's a subsidy. Okay. You also have these kind of motivations at the level of the individual bank. Individual banks, well, you could have campaign contributions. It's the Clinton story, actually. You could have revolving doors. You could have regulators that start to work in a bank. You could have people from the central bank that work in a bank, or bankers that go work for the central bank. Think about Paulson, who is a Goldman Sachs graduate and chairman, and went to the Ministry of Finance, basically, in the United States. Think of Draghi at the ECB, who's also from Goldman Sachs. And remember, Paulson, he became the man responsible for saving the banks, but he is a former banker. And the first thing he did is save his own bank. Because there was a really big insurance company, AIG, bankrupt. AIG had all these credit default swaps, these insurance contracts with Goldman Sachs. There was a total of 12 billion of contracts outstanding between AIG, the bankrupt insurance company, and Goldman Sachs. So Goldman Sachs was in risk of losing 12 billion. The fair value at the moment of this thing was 3 billion. So they would have lost 9 billion. But then Paulson saved AIG. It's the first thing they did after Lehman Brothers failed. And AIG paid out the full 12 billion to Goldman Sachs. So Goldman Sachs actually got 9 billion extra because of Paulson, who is from Goldman Sachs. I say, wait a second, is this okay? Maybe it is, maybe it isn't. So this is the guy, right? So, we need to save AIG is in Parliament. So he just did it. Okay, all right. So indeed, how do we see these things? You have political capital to deal with administrative burdens. Maybe if you get a kind of politician in the bank, or maybe you get a banker as a politician, what could you do? You could have access to the government deposits. So maybe if you have good connections, all these big government institutions put your deposits with you. Maybe the government will close an eye if you violate some rule. So we call this reduced supervisory oversight. So maybe if you have good friends in the government, you can do whatever you want because nobody will care. We actually wrote a paper in Journal of Comparative Economics ages ago that shows in Russia, if you're very big or very central and you violate the norms, you're less likely to lose the license. So you have, in Russia, you have all the bank standards, liquidity, solvency, all the rest. And you know if a bank violates it and when. So you can kind of calculate a summary of violation, and you can link then these violations to the likelihood that you lose the license. And you see that this relationship is weaker for big banks, for central banks, and it's also weaker if there's too many banks to fail. If everybody is violating, nobody is losing the license. So you get implicit guarantees, all of this. Do you have any real life examples? Well, one typical example is the amakaduri in Japan. Amakaduri is like a Japanese term. It means descent from heaven. And it's a habit in Japan that if you're a bureaucrat and your end of career, you descend from heaven, which is the bureaucracy, to some big company or a bank. So many of the leaders of big banks are former employees of the Ministry of Finance or the central bank. And they are descent from heaven to a bank, but of course the reason they're there is if they need the government, they have to do this and the government will help them. So it's a very closed and very tight system. You have the whole discussion of revolving doors that goes back a very long time, so where individuals go from banks to a government and back. It's a big problem. But think about all these newly nationalized banks. Dexia in Belgium, ABN AMRO in the Netherlands, RBS, Royal Bank of Scotland in the UK, but Dexia became Belfius. So all these new banks, who is heading the bank? Who is the chairman of the board? Who is the CEO? Politicians. And they earn a good amount of money. They earn millions of money as a chairman of a bankrupt bank. So you think, wait a second, think about Sberbank in Russia. Also, we'll talk about Sberbank later on in more detail. There's a paper on Turkey I wrote, but actually I'm going to skip that. So how am I doing on time, just to have an idea? Okay. Oh, fuck Turkey, good. Bye-bye Turkey. So, I mean, I don't mean fuck Turkey as a country. I obviously mean I'm not going to do this in this presentation only, right? So don't get me wrong. So let's look at recent evidence. TARP. TARP is a Troubled Asset Relief Program. It is the program used in the United States to save the banks that were in trouble. Hundreds of banks got money under TARP, I think 300 or something. So it's a big program. And it's the bailout program, like Russia had one, like Belgium had one, for the banking sector in the US. And you could ask yourself, okay, the US, okay, that's a real democracy. I'm sure this was a fair process, right? It was not politically connected, but it was. There's a lot of recent research showing that there were big problems. There's a paper in the GBF that shows that politically engaged banks, in terms of direct connections or in terms of campaign financing, are more likely to receive TARP. So they're more likely to be bailed out. If they receive TARP, conditional on receive TARP, they receive more as a share of the total assets. And they received it earlier. They weren't kept hanging. They just say, ding dong, there's the money. They're really fast. So even in the US, political connections, they do help. If it comes to it, it will help you. There's a paper in Journal of Financial Economics that basically points out that what happens is that banks respond to it by taking more risk. So saving the banks has also a cost. Because look, if I'm a bank and I'm actually relatively healthy, and this little help from the government can help me out, I'm just going to be fine. But if I'm an almost dead bank, I'm in really big trouble. What I could do as a reaction, if I get money from the government, I could what is referred to as gamble for resurrection. I could say, man, I'm dead, and this little government, or this help of the government is not going to help me a lot. It's going to help me 2 years. So in these 2 years, what I will do, I will double my bets. I will take even more risk. If it goes wrong, I'm dying, but I'm dead anyhow. If it goes right, I'm back in business. So actually, the government money led to even more risk taking. So there are direct effects of TARP. What I'm doing, I'm also writing a paper about the indirect effects of TARP. Because in the US you have these local banking markets, and in these local banking markets you will have one bank which is bad, but has been saved by TARP. But around it are other banks that were not sick enough to be saved by TARP. So initially, imagine Ivan is the sick bank. I'm sorry, Ivan, you're just in front of me. So Ivan is a sick bank, and we are all the other banks. And he's dying, so it's good for us. Because his depositors run away, they'll come to us. And his clients are running away, so we get more business because he's in trouble. But then he's getting TARP. Whoa, this is tricky. What is going to happen now? Maybe our depositors, what will happen? Maybe our depositors say, oh, this guy was bankrupt actually. Oh, we are all so scared. Or maybe our depositors say, oh, whatever happens, they will save us. So how will it work? Will it be a wake-up call to make the others afraid? Will it be a lullaby effect? To say, oh, if things go wrong, we're saved. Or will we start to lose deposits? Because he has gotten TARP, so he has shown that if trouble comes, the government will save him. We haven't shown this yet. So maybe our depositors will say, let's go to Ivan. And then the competition is suffering, and the good banks are actually being punished by the bad bank through the government aid, right? So you could have these spillover effects. So there are interesting things to look at. So basically, okay, this is the whole idea. Now, what we have been talking about is the helping. This is the question of Marian, right? So his question was basically, is it only a helping hand or also a grabbing hand? And all we discussed till now is the politicians extend the helping hand. The politicians help the banking sector or the politically connected banks. However, it could be the other way around. It could be a grabbing hand. Oh, a grabbing hand. This actually happens in other sectors than banking. There's a very famous paper of Bertrand, Kramark-Schwarz and Tesmar. It's still circulating somewhere. And basically they find in France, if you have politically connected CEOs, in France you have a very political system. You have these state companies, and many of the CEOs are from the Les Grandes Écoles, les énarques, and they're politically connected. And what do they see? In election years, these firms hire more people, so create more jobs, create more plants. There's lower closure of plants, lower plant destruction, and it's especially true if the firm is in a politically contested area, so if the election is close for the incumbent. So they show that even firms, if they're led by a politician or a politically connected person, that these politically connected CEOs, they deliver the goodies for the politicians. They deliver the votes by creating employment, essentially, right? So this is the thing. And now we come to what I really want to talk about. The same is true in banking. In banking, you have a very famous paper of Dinch in 2005. It was very highly cited. What this guy basically shows, it's cross-country. And what they do is, across all these countries, they look at the time series of, in this country, the government banks and the private banks. And what they simply show is, compared to the private banks in this country, the government banks lend more in election years, or the run-up to election years. So there is a political cycle in bank lending. Lending increases if the election is close. The underlying reasoning is very indirect. Why do we do it? Politicians want to be elected. By extending lending, they will create investment and consumption and employment, and this will make the voters more likely to prefer the incumbent. So it's very indirect, right? It's politicians, banks, lending, some economic outcome, and voters eventually giving the goods. It's a very indirect, Marianne.
With the implying assumption that my memory is very short, right? So this is behavioral channel.
Yeah. So you shouldn't do it 4 years beforehand, because then people will even not remember anymore. So it has to be salient. So you do it right before the election. So in Belgium, typically, right before the elections, they will make the new pavements. And all the real big local investments, they do it right before the elections. And people remember what the government actually does for them. It's logical, anyway. But so this also happened with banking sectors. And they showed it's true around the world. So this is a paper, and they show it for OECD countries and non-OECD countries. And basically they find it's also true in OECD countries and developed industrialized countries. However, in non-OECD countries, in emerging market economies, you could say, it's more true. The effect is a lot stronger, 3 times as strong actually, in non-OECD countries than OECD countries. So they're the first one to actually show, hey, in banking, there is not only the helping hand of politicians, there also is the grabbing hand of politicians. Right? I like this paper a lot. It's a very recent paper. It's just out, actually. It's a paper of Engelmeyer and Stowasser. And what they do is, so people say, yeah, this happens, but it doesn't really happen in OECD countries. A little bit, they found a small effect. But what these guys do is they look at Germany. Like Germany is, at least for reputation, a very strict, very consistent, rule-based country, right? The politicians surely in Germany would not use the banks, would they? Now these guys show a very nice, so in Germany the banking system is very strange. You have a few big banks, we know them, Deutsche Bank, Commerzbank, Dresdner Bank, but they have 2,000 small banks. And every little lender, so the oblasts and the Krux and so on are called lender in Germany. And every little lender has at least one state-owned saving bank. Yes, a Landesbank basically in Germany. They have a Landesbank, but they also have many cooperative banks and other small local saving banks. And so what these guys do is they say, and also, interestingly enough, the elections are not at the same moment. They are staggered. So every state have elections, local parliament elections at different times. So they have the election times and they have this panel of banks. And they show that the Landesbanken, so the state-owned banks, where often a politician is in the board or a CEO, lend more just before the election than the private banks in the same region in the same time. So there's a clearly electoral lending cycle in Germany. the Landesbanks are used to increase lending and run to elections. They also show that this is especially true if the election is contested, if it's close. And they also show that it is inefficient. It's efficient in terms of winning the election, but it's inefficient economically because 3 years later, these Landesbanken, so the higher the effect at the Landesbank level, the higher the increase in bad loans later. So the loans are actually not paid back. So they give loans to increase some investment, some employment, that turns out more votes, but then later on the loans are not paid back in full. So it comes at a cost. So there are higher defaults, and basically what they conclude is this increased lending by these Landesbanks is basically a substitute for increased public spending. So in Germany, it's not the local governments that spend more, like in Belgium, in the run to elections to re-elect the incumbents. It's the banks, the Landesbanks, that are used. And they extend lending, and that's how the returns are got. Okay. And actually, there's a lot of other ones doing the same, but I just took the two most salient ones. Okay. There's another paper of myself, actually, looking at Russia. This is kind of interesting. Well, of course it's interesting. It's my paper, but so I find it interesting at least. So basically, what we do is we look at the Soviet Union history. And for the Russians here, they should know, but maybe they don't know. And for the non-Russians, I need to explain it anyhow. In the Soviet Union, we had one big state bank, the Gosbank. In '87, it was split in 5 state banks. You had the Sberbank, you had the Vneshterbank, the foreign trade bank, you had the Promstroybank, the industrial and construction bank, you had the Agroprombank, the agricultural bank, and you had the Yelstsin, the social housing and living bank. 3 of these banks, the Promstroy, Yelstsin, and Agroprombank, they disappeared in a way, not completely, but they exploded in more than 600 independent banks before '92 in the Soviet Union. There was a kind of successionist, almost voluntary privatization, uncontrolled. So what happened is the local departments of these banks, or the sectoral departments of the banks, basically registered as independent banks, and the shareholders of these new independent banks were typically the biggest clients, the state-owned firms. So these banks were created before the Soviet Union ceased to exist. And then what happened subsequently, the shareholders, it used to be the big state-owned firms, they were privatized themselves in the mass privatization scheme in '94. So what happened is these former state banks became private banks. But they don't look like former state banks. So if people talk about state-owned banks in Russia, nobody talks about these banks. They talk about the current state banks. But there's hundreds of banks around that are actually former state banks. But they have, the name is Первый Коммерческий Bank or something. So they have a very flashy name, which is completely unrelated to the state origin, but they're actually former state banks. So what we did is, we went to the archives, and for every bank in Russia, we tracked down whether it was a former of these banks or not. We called them Spetsbanki. So we know for every bank whether it was a Spetsbank or not. And what we see is regions in Russia that have more of these Spetsbanks today actually also see more lending. But they do not see more growth. The lending is, in fact, zombie lending. They see, in fact, more employment, but very stable employment, like in Togliatti, right? Like in the Monogrods. Lots of employment, no growth. So what's going on? We also show that these banks, what happened is they maintained old political connections. The people in the board of the banks are the people from the old system until they die, basically, and they have to be replaced. And these guys keep financing their shareholders, which are the privatized big state-owned firms. And so it's, there are 2 zombie organizations. It's an almost that bank and almost that firm, and they're holding each other hand at the top of the hill not to fall down, right? They're balancing and they say, let's keep tight here and let's do nothing. That's what they do. No creative destruction at all. This is especially true if the regional institutions are bad. We actually also show that in those regions where the Spetsbanks adapted, where the institutions are better, at some point they start to contribute to growth. They become normal banks. But in those regions that are kind of frozen in time, where nothing happens, they're especially bad. They prevent everything. So just to show you, I'm not going to show you any regressions in this paper, I'm just going to show you some data, just to give you an idea what we did. So every dot is a region. And I show just, these are the Spetsbanks per million of inhabitants in 95. So this is a regional characteristics, and this is the per capita lending. And it's not very strong, but it's kind of positive relation. So if you have more Spetsbanks, you tend to have more lending. In fact, it becomes even clearer if you just split the regions. So what we did is we split the regions down the median, and we say you have the high Spetsbank regions and the low Spetsbank regions. And then just for every region, look at the total amount of lending, the evolution. This is what you get. So in 97, the whole system is more or less that. The banking system doesn't work yet. And basically the banking system is at that moment a casino, essentially, and they do a lot of foreign exchange and interbank market operations, but nothing much more, exchange dollars. And then lending is taking off after the stabilization. And the high Spetsbank regions see lending increase a lot faster than the low Spetsbank regions. And the difference is, over this period, it's 22 to 30%. So it's economically substantial. It's a lot more lending. But not more growth. Where does the lending go, right? So this is the same Spetsbank per population, but this is now annualized income growth in real terms. There's nothing there. There's certainly not this positive relation. If anything, it's in fact negative, the relation. And if deposits. Yes.
There is a famous paper related to banks and economic growth.
Yes.
To show that where banks collect more savings,
yes. It's local financial capacity. Yeah. Actually, I will talk about this after the break, in fact. But not about Russia in my second paper. But this was really about lending. Of course, all these banks, actually, that's a good question. Because it's actually not about saving. Because in Russia, half of the lending is financed by interbank lending. So the Russian banking sector spends a lot more on lending than it has deposits. And the rest is from foreign countries. That's why the financial sanctions are so harmful. Actually, half of the lending is financed by foreign banks' bonds, basically. And this is recycled in the interbank market. And who are the big players? Sberbank. Sberbank is giving a lot of money into the bank market to other banks. So in fact, the lending can be quite out of line with the deposits at the level of the bank. Yeah. But you didn't check it in this paper.
It seems quite natural for this exercise to just directly compare the banks, but you don't have balance sheet data. Like
We do.
You do. So you actually,
Yeah.
this is a regional comparison. You can also do like bank level.
Yeah. Actually, we do this at some point. Yeah. So if you do this for the lending, you can do the same for income growth. No effect. Completely parallel. So the higher lending does not lead to higher growth. Strange. Why? So we got the referee, and the referee said, why is this? So we showed this. Actually, we came to this paper to expect the opposite. What we thought is, we have found an exogenous source of finance. Because the problem is in economics, people say finance is good for growth, but finance is endogenous. So now we have an exogenous source of finance. These Spetsbanks, and they're allocated because of some Soviet decision. So it's a random allocation across regions. And we thought, okay, those regions that have more of this lending will grow more. And we have shown finance is good for growth. But fucking Christ, the sign is wrong. These guys lend more, but growth is less. So we thought, what's going on here? And so what started out as a paper about finance and growth became a paper about zombie lending. We had to explain the results. And then we went to these banks and said, okay, how is this possible? So let's go to all the banks you can find and look at the board of directors. And then you see, so these are the Spetsbanks, these are the other banks. And you see in the Spetsbanks, more than 3/4 of the directors is politically connected. Almost 90% of the directors is the politically connected guy. For the other banks, it's a lot less. So these Spetsbanks are heavily politically connected. And so they deliver the goods. They keep employment high, so everybody is happy and votes for the right persons.
What's the definition of political connection?
The political connection in my case is, did the person work in the state bank system in the Soviet Union time. So did he actually give loans to these privatized firms in the past as a state bank? Yeah. So it's a very, well, this is the definition. Yeah. So it's not about being member of a party, it's about being member of the banking system in Soviet times, when everybody was, of course, in the party and had a political connection. Okay. So this is this paper, which brings us to the last part of the lecture. Does it also, so I showed you this paper of Diensch around the world. I showed you this paper of Stoas and Engelmeier in Germany. Now the question is, did it also happen in Russia? Did some Russian politicians use the banks to get elected, right? And this brings us to the interesting paradox in Russia of President Putin. Now President Putin, he became prime minister in mid-99. Quite surprisingly, and I remember all the articles in the West and also the Russian newspaper, who's Putin? Who's Putin? Nobody knows. So we had been gambling who would be the next guy, but not Putin at all. He became prime minister, he became very popular because of the Chechen war quickly. And then, a Russian tradition, every prime minister in recent Russian history has founded his own party. You have had Yabloko, you have had Nash Dom Rossiya, you have had RSSIA, and now you have Unity, Rossiya. So every prime minister found his party, and Putin did the same. He became prime minister and he started immediately his own party. But the interesting thing is, this Unity party that existed for 3 months at the elections, all at once got 23%. The Duma elections of 99. And then something really shocking happens, at least to us, not to the people playing the game. They knew, of course, it's a coordinated game. But Yeltsin all at once abdicates. So this New Year's speech of 2000, and Yeltsin basically says, yeah guys, I'm out of here, bye-bye. So this is a picture of the speech, said very sad face, was happy to serve you and so on and so on, but now I'm gone. And Putin becomes acting president. And what happens is, as a consequence, there are unexpected early presidential elections. So Yeltsin, at the time the constitution still provided you could not do more than 2 terms. So you couldn't do like Putin does a jump and then another term. The constitution said only 2 terms. And the term was going to end in June 2000. Then he gives his New Year's speech, and all at once, it's not June 2000, it's March 2000, early presidential elections, because Putin gets acting president, and you can't have an acting president forever, you have to elect one. So you have this early election, and all at once, from 23%, Putin jumps to more than 50% in all the regions, in 3 months, which is a wonderful political performance, right? And the question is, why is this? Today, people would say it's to do with ballot stuffing or to do with manipulation of the media, but in 2000, Putin was a lot less powerful, and he couldn't use the mechanisms he can use today. So the question is, what did he use the mechanisms he used in Germany and the rest of the world? Was he doing this way? And the answer, my answer is possibly yes. So this is basically what I said, right? So he becomes acting president in the 1st of January 2000 and wins the March 2000 early presidential elections by a landslide victory. And this is kind of the question: how, why, how, what's going on? Huh? So this is the question. And this is a question you want to know for every politician, right? Essentially, nothing special about Russia here, but there's on internet 1 million pictures of Putin. You can pick whatever facial expression you want. It's not a problem. You find everything. Sorry?
He doesn't have that many. He has like 5 to 6 million.
No. Maybe in the Russian Google, but in the Belgian Google, there's plenty of pictures actually. I don't know. I mean, I didn't check, but I have found many pictures. No problem. So if you ask this to people in the West, they will typically say the usual stuff you expect from people in the West. One thing that certainly could have played a role is patriotic feelings. So in Russian politics, some people say there's 2 driving forces in the Putin presidency. What Putin wanted to do is restore stability and restore sovereignty. And he wanted to do this at the political front. So sovereignty, basically make the political system completely independent, and on the economic front, not depend on foreign finance and make a strong economy. And he wanted stability on the economic front, no more economic crisis, and wanted stability on the political front, which kind of worked, essentially, right? But not completely. So these are the driving forces. He wants stability and sovereignty on the political and economic front. And how do you do this? Well, one factor to do this is whip up the patriotic feelings. And there's a lot of evidence that it's actually working. So the second campaign in Chechnya that Putin started already in 1999 and concluded in early 2000s was a massive success for him as a politician. He, as opposed to Yeltsin, who lost the war, Putin won the war, and that really bought him a lot of votes. If you look at the data, this is data from Levada. It's a picture from The Economist, but this is data straightly from Levada, which is the well-known and trusted Russian polling center that does this stuff. And it's really reliable. And we have two lines. You have the rating of Putin, and you have the rating of the government, the Russian government. And here you see the prime minister, Putin is president, Putin is prime minister, Putin is president, Putin is prime minister, Putin is... So you have the series of the reign of Putin. But what you see, this is clear, is, look, the Moscow theater siege, there was a big peak in the Chechen war. Then, where is the Georgian thing? The Georgia war, see, a little peak. You see the Crimean war. And then the ruble collapses, the sanctions, no effect. So basically, patriotic feelings work in Russia. It's politically sensible to be patriotic because it buys you votes. Okay? And some people have said, look, the only explanation for his sudden rise to popularity is the Chechen war. But I think that's too easy, that's too cheap, that's not enough. Okay, there's another paper that says maybe it's media control. And it's the famous paper of Nikolopov, Petrova and Juravskaya, who are now in Paris and Barcelona, respectively. Popoy Fabri, this Masha and Ruben Popoy Fabri, and Katja is in the Paris School of Economics. And they show that, okay, in this election, there was actually one television station that was still free. It's called NTV. It's still there. And you also had the state channels. And the state channels, RTR and ORT. So ORT actually was also at some point owned by Berezovsky, but by then he was already chased away and that had become state-controlled. And they were very friendly to the Kremlin. But NTV was viciously against Putin because it was owned by Gruzinski, an oligarch who was right to hate Putin because he was chased away also after Putin won the election. And so he was fiercely opposing Putin. So it was some media control, but there was also opposing forces. You had a real democratic battle in a sense in this time. And only later NTV is actually taken over by some Gazprom subsidiary and it became also a state-dominated channel. Over some economic struggle, essentially. So what they say in their paper is, look, it's to do with media. So what they do is, NTV, this is the nice thing of the paper, NTV is a television channel, but it's based on antennae. And the antennae are just given by some Soviet decision. So it was not actually a television station, it was an antenna system used for other purposes. And then at some point it was privatized, bought, and it was turned into a television station. So the location is based on some decision, not economic decision. And they know the exact geo-coordinates of all these antennae. And so you can calculate, if you have the inclinations and you know where they are, you can calculate at every point how strong the NTV signal is. That's basically what they do. And then you get this map. So all the triangles, the black triangles, they are antennae. And the colors show you the strength of the signal. So if you look at this map, keep in mind, for example, a very strong dot here and here. So there's a black line here, a lot of NTV, and there's clearly a black line here, lots of NTV here at the southern border. So the question is, this NTV presence, is it related to votes? So let's look at the map of votes. These are the votes for unity. And you see where we had these black lines, the black dots, there's a white line here. Nobody votes for unity, where there's NTV. And here there's also like a white line. So where you, and of course they do regressions and they do all the kind of statistical tests and they show it. But just eyeballing the map, you already see it. Where there is a lot of black stuff, there's no votes for unity. Where there's also here. And where there's no black stuff, no antenna, there's a lot of votes for unity. Also, you have the opposition. The opposition at that moment was RSSIA, the party of Lushkov and Primakov. Lushkov was the mayor of Moscow, Primakov was the former prime minister. And they were the real opposition. And the Duma elections, they had actually exactly the same result almost as the Putin party. They had also 22% or something. So there's real opposition. Now, look at this. where people can see on TV, people vote for RSSIA. So this kind of media control matters. But although interesting, it does not explain the landslide victory of Putin, because it also shows there was opposition. Today, this is only Dost, right? And it's very, very small. It's 75,000 people. And the rest of the television stations are basically controlled by the government. So today the media coverage would be even more explicitly in favor of the government. That's fine. I mean, many autocratic countries and even democratic countries do this. There's nothing really special here. But what I'm basically saying is, hey, it existed in 2000, but probably was not very important in deciding the election. It cannot explain the jump from 23 to 50%. Because you have these big regions where it was the opposite, actually. So you have to dismiss the Chechen War, I think. You have to dismiss the media control in 2000. Maybe it was electoral fraud. That's what Western people say, yeah, it's fraud, Russians are all fraud. But, and so there are some indications in 2011, 2012 about this. But actually in 99, 2000, it's a lot less likely. Because at that moment, you had still one very influential candidate, Zhuganov. This was his last chance. He lost against Yelstsin in really strange ways. Well, Yeltsin was in hospital and almost dead, and with a very thin margin. And this was his last chance. There was a return of communists or not. So they really wanted to win. And the communists were still then well organized. So in every polling station, they had representatives. So it was very difficult, actually, to manipulate the counting. And ballot stuffing is, you have these ballot boxes, add additional votes for Putin. So people come to vote, and then there's a turn-up of 70%, and you increase it to 80% with Putin votes. That's ballot stuffing. But if there's a communist guy in the polling station, you can't do that. So ballot stuffing was kind of almost impossible then. I mean, these papers are in, actually, there are other papers. This is in science journals. You have science guys, Klimek and others, and these science guys have just looked at the distributions of the votes in the polling station and say, it's statistically impossible, right? So they said there's something really strange going on with these elections. And they compare to Brazil, Indonesia, to other emerging market countries, and they say, well, something really peculiar here. There's actually a few other countries in this paper that also are very peculiar in the Klimek paper. So it's not the only country where it happens, definitely. Now this is about the 2011 elections. I mean, many have seen this thing. What is it, actually? So this is this suggesting that there was some ballot stuffing, but everybody knows this, in fact. There was some ballot stuffing in the 2011 elections. How should you read it? Every polling station has two dots. One dot is red, and this is the share of votes for United Russia, and one dot is blue, and it's the share of votes for the Communist Party. What normally would expect is that the lines are horizontal and at a different height across the country, right? So because the votes for Putin party or the votes for the Communist Party should not depend on the turnout. This is the turnout. But what you see is the higher the turnout, the lower the votes for the communists and the higher the votes for Putin. And actually, in those places where 100% of people come to vote, magically, they all vote for United Russia and none of them vote for the communists. So this is a kind of, not a proof, but a clear indication that something is strange.
Do you have a turnout of 150% as well?
There are a few turnouts in excess of 100%, but then they kind of truncated them at 100.
They put more.
Yeah. And this is a famous, this is the last thing I show about this, because I want to talk about 2000, not about 2011. But there's this famous picture, it's made by a Russian guy. And so let me explain. This is really cool. I find this really cool, actually.
Can you translate the code?
Yes, sorry for that, yes. So, RSSIA. So this is, so what do we have? These are the election points, all the election points. 1,000 elections, I think 20,000 election points. And this is the votes for Putin, and this is just the frequency distribution essentially, right? So this point says 30%, so there is that many thousand polling stations that had 30% of the votes for Putin. For United Russia, sorry, for United Russia, yes. And so this is basically the area under the curve. So this is 100% of the polling stations. This is 100% of the polling stations. This is 100% of the polling stations. And every line just shows for all these polling stations how many votes go to this or this or this or this party. Yes? And so what you see, it should be some Gaussian distribution. But you see, first of all, this little peak here, which is very strange. Normally it goes down, right? The turnout, and the higher the turnout, the lower the number of polling stations. But you have it's turning around here. And also you have the strange peaks at even numbers. So it seems that there was some ballot stuffing, but they try to be smart. They say, oh, okay, let's manipulate the votes a bit. Let's add Putin votes, but people will see it if it's all 100%. So you do 55, you do 60, you do 65, you do 75, but they forgot the in-between numbers. And so you had these strange spikes. Yes.
I'm sorry, the standard explanation of this phenomenon is called Churov's chainsaw.
Yes.
It's not like they forgot middle numbers.
Yeah.
It's that like they are openly signaling they've done their job.
But possibly, yeah. Possibly they don't care. Yeah.
So even number is saying, yes, we falsified. It is a sign for the crowd.
But wait, look at the communists. They do it too. And those few polling stations where they have the power, they do the same. It's just a Russian tradition, basically, to do this. So it's not a United Russia tradition, it's everybody Russian times. If they can, they do it. I'm sure if Jablonka could, they would do it too. Yes.
It's a good explanation. Could be that these 2025 stations, they just didn't count the vote actually. They just wrote something in the protocols.
Yeah, that's the same. That's the same. Yeah.
No, but this has nothing to do with the Communist Party. It's just something that, okay, we decide how much do we assign to each party without even looking.
Yeah. So basically you're saying the 25 are linked to this 75, basically. They're the same stations. So let's say we have 75, okay, the rest, there's nothing, and communists, let's give them 25. So I don't know, we can't know, right? But it's possible. But you were saying Churov chainsaw. Churov was the head of the election commission. And so this you could see in the street protests. We don't believe Churov, we believe Gauss. So this is the Churov chainsaw, basically. Yeah. So that's what you were pointing out, right? But again, this is all very funny. But it didn't happen in 2000s. Because in 2000s, the power was much more equally distributed. It was not certain. They had only 22% in the election 3 months before. The communists were actually stronger in the votes. So in the parliament, the communists were stronger than Unity, remember? They had more than Unity, yes.
It's interesting that in the protests in Russia you show distribution cards.
Yes.
Yes. But in the ridiculous, nobody would understand.
Yeah, exactly. So in the protests in Russia, people actually understand this. In Belgium, people would say, it's a nice picture, but what does it mean, actually? So in Russia, this is an argument, which is pleased for Russia, right?
Good sign for Russia.
A good sign for Russia. So what? Yes.
Did you observe anyhow the role of those people who have observations during the elections, so that everything goes smoothly? Like
Yeah. I saw this paper with observers.
Does it help?
Yes. Yeah. Observation helps. Yeah. And there are actually papers that also talk about observers chased away, and there the manipulation is worse and stuff like this. Yeah. It's published. No, I agree. But again, this is about the 2011-2012 elections, not about the 2000 elections. No observers then. So let's focus on this. On banks. Did banking play a role? So the theory I have is, look, why wouldn't Putin use the stuff everybody uses in the West? The banks. Use the banks to get elected. So what is the theory? The theory is you have this huge bank, Sberbank. It's completely government controlled. It's actually owned by the central bank partly. And what is the potential mechanism we have in mind? Okay, Putin wants to be elected. He knows Yeltsin is going to abdicate. So what he will do already in December and January, he will start to give loans to state firms in the clear understanding that the state firms have to get out the vote for Putin in the early presidential election in March 2000. So you give the loans, they have to arrive to the system that takes almost a month in Russia in that period because the payment system is very inefficient. And then once they get the loan, they do their stuff and you get the votes. So you expect increases in loans if it is premeditated, this whole strategy. In December and January, you start to increase Sberbank loans to get the votes in March, basically. So that's the hypothesis. So what we're going to do, we're going to look at the regional variation in the increasing popularity of Putin from December 99 to March 2000. So we have popularity not by some poll, but by some election outcome, with 3 months difference, which is actually unique. So we're not going to do cross-country things and then looking at year data, like Stowasser does and like Dinge does. We're going to look at within-country stuff. That Stowasser also does. I look at 3 months variation in popularity, and we're going to look at a monthly variation in bank lending. Because we have the Sberbank loans in this period at the regional level and at the monthly frequency. And we know how many Sberbank loans go to this region in this month to firms and to households. And we're going to link this variation to the variation in the votes. And the idea is that the mechanism is the voter intimidation. Actually, Michael talked about it. Thank you so much. That makes my life very easy. So there is a lot of literature now that's showing that the workplace in Russia is a key site of political mobilization. People are mobilized at the workplace to vote for the right guys. And it's why, especially in Monogorods, you can threaten your voters because there's no outside option. The firm gives you your wage, your holiday, your social benefits, everything. And there's nothing else in this city. So this is a really good place to make you vote for the right person. Everyone understands this. And then you have this movie you almost showed with this guy saying, yes, we all understand our jobs, right? You're smart people, you're business people. This is what we have to do. So managers can use wages, they can use benefits, all kinds of things to do this mobilization. There's actually a lot of media reports also in the West suggesting that this is happening. So what we're going to look at actually is not, so the story we have, it's Sberbank lending and then private employment. It's not to the, so also you have also a lot of state institutions and state-owned firms. But in state-owned firms, they don't need to use lending. They already have the lending of the state. In addition, in state-owned firms, it's much more direct. I heard anecdotal evidence from completely different persons that had to do the following. That work for a state organization. At the ballot, they have to make a picture of the ballot and send it to their boss. In 2012, yes. So one person I met in Paris and one person I heard in Russia, how have to do it? So, but this is for some state organizations in the regions, faraway regions. No, but we think about this more indirect channel. This is not very strange, actually. There's a literature that shows the same is happening in the US. A lot of US firms in the run-up to the Obama election, where the firm was subsidizing the Republicans, sent mails to all the workers saying, you realize that Obamacare will increase the cost of workers for our firm, and you realize that in that case we may have to lay off people, but please vote as you wish. This is voter intimidation. It's the US. So there's nothing very strange with voter intimidation at the workplace. It happens. And it just also happens in Russia, from the Soviet tradition. You have a question? No, I'm joking. So this is from Karta Narushenye in 2011. This is one of these NGOs looking at, and so basically what they ask about is, were there any violations and were there any brokerages in the votes? And so you see that that employers had 82% almost of all the voter intimidations, while actually the party activists. So people not vote for United Russia because a party activist knocks at your door and says, vote for United Russia. No, that's only 1.6%. They vote for United Russia because the boss tells them to. Sanction. Okay, so let's skip this because I have no time, and let's go to it's a very simple regression. So basically, the dependent variable is the change in the vote, and we're going to link this to the change in Sberbank firm loans in the same month. We're going to also link it to the change in Sberbank loans to households. Because it could be some change in the Sberbank policy, nothing to do with the election. But then households, yeah.
What's the observation?
The observation is at the regional level, and the observation is the change in the votes in a region. Right? No. It's the actual outcome of the votes. December 99 is the Duma election, and March 2000 is the presidential election. So it's the actual change in the votes, and we're going to explain it by some regional controls and changes in Sberbank loans. And you also look at credit of private banks, because maybe some region, if Putin gets elected, has better perspectives, because they have a defense sector, but then also the private banks should start to lend more. So we control for private lending. Yes?
But they are not the same election. One is Duma and the other is president.
Yes, I agree. Yeah.
Is it possible that people vote differently according to what they are going for?
Most likely, because 25% of people change their votes. Yeah. So they vote very differently. But everybody knew, I mean, if you look at the program of unity, it was a very young party. Essentially was Shogu saying, well, actually, we support the president. We support the prime minister. That's the party program. So it was very clear that the unity party was a vote for Putin. Much more clear than in like Belgium or Italy. It's a very clear link. Yes?
Would there be a way to also use NTV? If you put what NTV as a control, as additional control? From the other
include NTV, yeah. But of course, it's regional variation. And the regional variation, so in the paper of Jaska, they actually have much more detailed variation. It's not regional, it's local variation. So we have only like 60, 70 regions, so it's, the signal is, and NTV is in the region, it's good there, but bad there, so you will have an average. It will average out very much. You could still do it, But we control for media freedom, actually. So let me show you, well, this is, I have no time, right? So let's freaking skip this thing and let's go to the result. So this is the result. So indeed, it seems to be controlling for the share of urban population, educated middle class, defense employment, all things that would maybe determine the vote for Putin. Distant from Moscow, other linguistic fractionalization, agricultural subsidies. We also include media freedom at some point. Controlling for the change in Sberbank household loans and the change in domestic loans. There's a clear correlation in the run-up to the election between the Sberbank loans and an increase in the votes. Right? And actually, of course, it could be that this happens every winter. It's like a seasonal pattern. So, but then you do placebo regressions. Do the same regression, but only change the Sberbank firm loans. Let's look at the later period. So, and then you see nothing there. So basically, you still have the change in the votes, but so if this Sberbank pattern is a pattern that happens every winter, then you should also see it in this winter, actually.
What is educated middle class?
It's from the paper of Asimoglu and Zhirovskaya. We got it. Well, so that's how it is defined. It's the same definition. Okay, so also, this was pre-election, this is post-election, nothing there, right? So these are placebo regressions. So it's only there in this election period, and not other periods. Now, the next thing is, if you are right, this is not enough, this is too cheap. If you are right, it should also lead to higher turnout. Those regions that get more Sberbank loans, if we believe our own channel, that the managers get the people out to vote for the right guy, you would see higher turnout in the presidential election than in the Duma election. So we did exactly the same regression. But now the only thing that has changed is this is turnout. Is there an increase in the turnout over elections? And this is explained by the Sberbank loans, right? And if we see that this alpha 1 is 0 only for the election months, then it means that Sberbank lending has increased the voter turnout for some reason. Is this true? Hallelujah. Look, this is now really surprising, right? So, and it's only in this month. You can do all the other months, nothing is there. And only in this month, in the run to the election, you see that, that something is there. It's kind of surprising. So the next thing we thought is, okay, and then I'm going to stop. What about these leaders? And it's the last thing I'm going to say. So today, Michael showed us that readers around Russia know how to behave. And they know, if I do not get the votes for United Russia, I will not be the next governor. I will be end-of-career governor. I will disappear, basically, and go on a pension somewhere. So people know how to behave. But in 2000, it was very different. The law changed in 2005. In 2005, Putin could nominate the governors. But in 2000, they were completely locally elected by the local parliament. They were very independent. Some of them really opposing Putin. So basically, and there's a lot of work proving this. Michael's result also, right? The governors do not stay because of regional growth, because they turn around the election results, right? So what we basically say is, but okay, how could they do it? because the regional governors could maybe do not cooperate. But there are some governors that are linked to the regime, right? So let's look at affiliated governors. And there's two ways of affiliation. One way is, was the governor appointed by the Yeltsin regime, which is friendly to Putin? Or was it already a governor there from before Yeltsin of the Soviet times? One. A second possibility of affiliation is, was the governor from the FSB? Is there a military connection, because that's a connection to Putin, or not? I mean, what you can do is you can interact these things with this Sberbank lending. So you could say, okay, our channel will be stronger in those regions where the governor is affiliated to Putin in some way or other, right? Okay, let's skip this. Is it true? So actually, well, this is maybe something I need to show. So this is in the regional elites. So there's a lot of CV, a lot of people doing CV analysis, and they look at how many people in the local elites are from the KGB. And you see, in the Soviet Union, the military actually had no political power. The communist tradition really was to separate the military from politics, and politics dominates military. But then you see that with the Yeltsin cohort, the second cohort, and especially the first Putin cohort, it really jumps to 10%. Actually, in our sample, we find 8% also. So this is the regression, and this is kind of interesting, right? So what we do, you have all the other variables too, but then you have this huge table, and John told me not to show huge tables, so I show you the small table. Thank you, John, with the things that we care about. And you see that, okay, appointed governor, so we had, the previous result was, in the previous tables, 13. And now we have 12 comparable, and the interaction between the Sberbank loans and appointed governor is not there. So this first column is about the appointed governors, and all the rest are the same variables, nothing there. The second column is about the FSB connection. So you have still, and now the main effect is gone. The Sberbank loans don't matter. They only matter for those regions that is actually an FSB guy. But there it's not 12 or 13, it's 36, 37. It's 3 times as large. So actually the whole effect we find of Sberbank loans is situated in those regions, in those few regions where the governor is connected to Putin in this way. So, which lends support to our channel. It doesn't, it also, this, I have to stop, right? So this is the last thing I'm going to say. Actually, it's also finished. It's now I have my conclusion in this section. So the last thing I'm going to say is, this does not show it was centrally planned, actually. It's very possible that it went the other way around. Now imagine you're a KGB guy. The Soviet Union falls apart, you don't particularly like it. Defense investment disappears, your country loses sovereignty almost, you have financial crisis, and then all at once, by a combination of luck and planning, there is a guy who is KGB affiliated, and he may become the president. So maybe these guys think, I want this guy, let's race to the occasion. Let's use our network, use our resources to get the guy elected, because we want him, he will help us, and we will help him. So is it centrally planned, or is it an automatic coordination of a network that exists to help the guy? Our data cannot disentangle this at all. Huh? So what we will try to do actually is try to disentangle, you could call it the horizontal and the vertical channel. And one way of doing it is, you could say, if it is horizontal, if it's centrally planned, then the Sberbank lending should increase more in those regions that do the worst in December '99. So then you will use the Sberbank funds in an optimal way, allocate them to get most of the votes. If it's horizontal, there will be no such relation. So what we could try to do is run a regression of the increase in the Sberbank lending on the expected political return of this. And if there is significance, if the Sberbank lending increased most in those regions where the political return is potentially highest, then it's an indication that there is some central planning. If you reject this, then you say, look, this is just spontaneous coordination. People like Putin, and they got him elected, and that's what you would expect in this situation. All right, I rest my case. Any more questions? Sorry, I took too much time. No more questions. Coffee. One question.